The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everyone, and thank you for joining us for our software automation webinar series. My name is Sasha Pozzoli, and I'm a marketing coordinator at SWK, and it's my pleasure to welcome you all here today. This afternoon, I'll be joined by Bethany Kay, Strategic Alliance Manager at Avalara. She manages the partner relationship between SWK and Avalara. And today she will be walking you through Economic Nexus and the future of sales tax, the impact of the South Dakota versus Wayfair Inc. ruling, and what you can do to protect your business. Just a few housekeeping items before we get started. All of the lines will be muted during the presentation. We're recording this session and distributing it after the webinar so that you can expect that in the next day or two with the link to the recording. If you have any questions throughout the presentation, please type them in the chat box at the bottom of your GoToWebinar sidebar and hit send question to staff. So without any further ado, let's go ahead and get started with our presentation. Take it away, Bethany.
Thank you, Sasha. Good afternoon, everyone. Thank you for the opportunity to speak on what is the hot topic in the world of sales tax, and that is the impact of the Supreme Court ruling that just passed last June, and that is the South Dakota versus Wayfair ruling. So I've got you, why is my slide not going? Hey, Sasha? My apologies, but now my slide isn't, there we go.
Perfect.
Sorry, a little bit technical hiccup at the very beginning. So for the 30 minutes that I have you today, 30 to 45 minutes, what I want to do is talk about what sales tax, what the world was like pre-ruling, because that really gives you an overview of where we were and why we are where we are today. And then I'll help define what Economic Nexus is, talk about the ruling that passed last year and its impact, some next steps about what you can do and how to automate sales tax compliance. Hopefully that agenda sounds right to you. So I want to start by talking about, again, what sales tax was like pre-ruling. Many of you may not know, but the sales tax landscape I've been following for the last 2 decades has changed drastically, particularly over the last decade. And a lot of it surrounds the concept of nexus. For those of you that aren't familiar with that term, it means to join or bind, and it's a legal term that refers to the requirement for companies that are doing business in a particular state to collect and pay sales tax on that state. So let's jump back in time to 1992. This is over 2.5 decades ago. There was no Amazon, there was no shopping on cell phones, and sales tax at that time was grounded in a Supreme Court case at the time, Quill versus North Dakota. And in that case, the Supreme Court ruled that a state couldn't require an out-of-state company, let's say a California company selling into New York, couldn't require that out-of-state company to collect tax unless that company had substantial physical presence or nexus in the state. So typically what you knew of as stores or offices, warehouses, real estate employees, etc. Now, we can thank our lovely Amazon and other e-com sellers for really helping pave the way for the new sales tax world we live in. With the advent of e-commerce, I'm gonna put my slide up here. With the advent of e-commerce, specifically Amazon coming onto the scene, states lost a significant amount of tax revenue, and I can't underscore significant, you'll see in the next slide, because they couldn't bind those out-of-state sellers to their state to collect sales tax because of this outdated physical presence standard. Businesses have changed, now the tax laws need to catch up. So to give you a sense of what states lost, 2017 alone, a year and a half ago, it's estimated that states across the US lost $13 billion from uncollected e-commerce sales tax, okay? That's huge. And what's also important to note in this slide, if you notice that sales tax really makes up roughly about 47% on average of state revenue. So half of their revenue, half of state revenue is going away because of this outdated standard, physical presence standard from 1992. So in order to make up for this gap, what states started doing over the last decade and a half is to do two things. One, increase audits. We're not going to really talk about that today. And two, they basically tightened nexus obligations. They tightened nexus laws, and they passed various types of laws over the last 2 decades. Some of you may heard of click-through nexus laws or affiliate nexus laws, cookie nexus. There's been about 5 or 6 different variations of nexus laws that have been passed to bind out-of-state companies to the state. And the one we're going to talk about today, which has had the biggest impact, is Economic Nexus. Okay. There we go. Here's a real simple definition of what economic nexus is. It's similar, I mean, it's basically what you think of it as. It's a level of economic activity in a state that an out-of-state company has. So it's entirely based on revenue. If you're doing, for example, in South Dakota, they passed an economic nexus law, $100,000 or 200 separate transactions, that's their criteria. And important to note on the right-hand side, I included this table to give you a sense for, and when we talk about SD Wayfair in a minute, all the different states that have passed economic nexus laws. A good majority of them passed similar laws to South Dakota, and that threshold is $100,000 or 200 separate transactions. But as you see, there's a lot of variation state by state, so keeping track of all this can be a real headache. But the goal of what these economic nexus laws, they really aim, the states aim to level the playing field between those out-of-state businesses that aren't collecting sales tax and those in-state businesses that are required to because they have a physical presence. It's been an unfair advantage. Okay, so let's talk about Wayfair and how that all happened. Basically, up until June of last year, over a dozen states had passed these economic nexus laws, and they were really tickling the idea of physical presence no longer being the standard. And it wasn't until March of 2017 that the South Dakota Judicial Court ruled that the state's economic nexus laws that they passed were unconstitutional. So this was the first challenge. And then about 6 months later, the South Dakota Supreme Court struck down that legislation. And then US Supreme Court agreed to take up the case last January of 2018. So they deliberated over 6 months, and in June 21st, they ruled in favor of the state. They ruled in favor of South Dakota, and that overturned that long-standing physical presence standard that was really no longer viable for states. They were just losing too much money. So what does that mean? Well, South Dakota is not the only state, like I mentioned in the previous slide. There are now 38 states that have passed economic nexus laws. And states can now have the authority to impose obligations on out-of-state sellers based on those economic nexus thresholds. So who's affected? All remote sellers, both online and offline, it doesn't have to be e-commerce, who aren't registered with the state. For South Dakota, their threshold, as I mentioned, they were the first one that kind of went through this, is $100,000 or 200 separate transactions. That date came into effect, or the ruling there came into effect on November 1st of 2018. And again, the most impactful thing that you need to take away is that physical presence rules overturned, okay? Some more details, and important to note, again, as I mentioned, there have been various different economic nexus laws. This ruling, the South Dakota versus Wayfair ruling, merely adds economic nexus to the existing list of other nexus creating activities, like I mentioned, click-through nexus, affiliate nexus. But this really has toppled businesses that typically didn't have to collect into a collection mode, okay? The South Dakota law applies to taxable sales made to consumers overall. It doesn't change the taxability or what is tax exempt. In South Dakota, where they tax many things, it applies to service providers as well as tangible goods that are sold. It also applies to manufacturers and wholesalers who sell direct to consumers. Okay, some frequently asked questions that you may be thinking about. The first one being, if I'm already registered in South Dakota, does this court decision apply to me? No, you're already doing your job, you're registered, and you're collecting sales tax, so you can breathe a sigh of relief. Does the ruling only apply to online transactions? No, as I mentioned, the ruling applies to both online and offline sales. And third, does the Economic Nexus rule apply to non-taxable transactions? I'm going to address this a little bit further in a couple more slides, but basically the ruling doesn't change what is or isn't taxable. Taxability does not change. If you hit that threshold, you need to worry about collection. So one of the things I wanted to share with you, you're not going to be able to read this because it's in fine print, but I wanted to share with you Avalara as a real thought leader in this space. We have a website. If you just type in, after you get off this webinar, Avalara and South Dakota versus Nexus, we have a lot of information that is easily accessible at your fingertips. And we have a hub that basically updates all this information on not just Economic Nexus, but those other types of Nexus that may require sellers to collect. You can download a frequently asked question guide. You can even go state by state and drill down to the state's rulings if you are curious or need to dive a little bit deeper to understand a particular state. And we also have expert videos, you know, like a 2-minute video and things that you can share internally and take back to your companies if you want to share with other people internally to have that discussion. Now, there's a lot of information on this slide, but again, what I want to point out is on our website, and something that we update regularly is this map in the bottom right-hand corner. All those blue states have Economic Nexus laws that have been passed and are coming into effect. If you had looked at this map 6 months ago or 8 months ago, it would have only had a dozen states. So it really has been a wave that's just taken over, and pretty much every state, aside from those states that don't collect any sales tax, have enacted laws. And as you see in the upper right-hand corner, there are several states that just came into effect, which are really important ones. California, my home state, has Economic Nexus laws that just came into effect in April of this year. And coming up, another big state that people sell into, Texas, and that's later this year in October. So one important thing that I want to make sure all of you know on the phone, that some of you may be wholesalers or resellers and think, this doesn't apply to me. Well, unfortunately it does. Many of these states, even if you don't have taxable sales, there's a good handful of them, I think I want to say 18 or 20, that still require you to register and report all of your sales. So you really have to know whether it's through a CPA or somebody that can help you with this process, and we can too. Know that you may even have to file 0 returns and register in these states to report all of your sales, gross sales, retail sales that include those non-taxable or exempt sales. So you're not completely off the hook. So that's something that you'll need to delve into a little bit deeper. Okay, so you know a little bit about Wayfair, a little bit about Economic Nexus. You may be thinking, what are my next steps? What do I need to do? As I mentioned, really the first thing that you need to do is to get expert counsel. It's not something that you need to panic about, but if you haven't dealt with this and think that you have Nexus in these states and that you may have to collect tax or report tax, you need to contact a CPA or an attorney that has expertise in this area. And not all CPAs do. It's kind of a unique area of tax. So make sure if you do have a CPA that you ask them if they have expertise. The good news is you're free to reach out to SWK or Avalara, to us directly. We are connected with pretty much every firm, small firms all the way to the big 4 that are international that can help with this work to really determine, the first steps is determine where you have Nexus and where you need to monitor going forward. We can help you with registering in new jurisdictions. We can help with back taxes as well if your CPA does not do that. That's really the first step, is knowing where you have to collect. Okay. So when thinking about Nexus and your need to become compliant with these new laws, it's really worthwhile noting what top performing organizations do. I like to know what my peers do and what they're good at. So 72% are more likely to leverage real-time updates to tax changes. Just like what we've experienced with Economic Nexus. Don't rely on a manual process. You don't want to be sitting in there and trying to figure out state by state what you need to do. They're also 3 times as likely to have an automated tax compliance process. Again, it's a total time sucker if it's done manually. It really should be automated like payroll taxes. Which leads me to automating tax compliance. Perfect segue into Economic Nexus changes and coming into the business year and what you can do as a business to become compliant. Okay. I want to talk a little bit before I go over how to automate audit. We briefly mentioned that states are doing 2 things, increasing their audits and tightening Nexus obligations. And it's really not a matter of if, but when a company will be audited. And there's a high cost to this audit risk. The data that you see on screen is from a 2017 Wakefield report that surveyed about 400 finance and accounting professionals and companies of about 10 million or more from all different kinds of industries. Most of these companies had a handful of employees that were dedicated to sales and use tax management, and they averaged about 40 hours a month on running reports and reconciling data and managing their exemption certificates, collecting them and storing them, updating their rate tables to be sure they have the right tax rate in their ERP system, and researching the rate. And what they found out is the average cost of an audit really is about $61,000 across the board. And from a small company to a large company, an enterprise company would be about $400,000. That includes penalties, interest, back taxes. A lot of times companies will have to hire an outside consultant to help them with the audit. That cost seems very high to me, given the fact that they already have a handful of people that are dedicated. It tells me that using people in-house typically doesn't work for sales and use tax compliance. And the other interesting thing is on this slide is that when surveyed, 75% said there's a likelihood that the auditor will find mistakes. So they've got a dedicated team. The cost of the audit is still high at the end, and they still know that they have mistakes. So this is not a system that's working for most companies. So as well as audit risk that's associated with tax compliance and the nexus risk that we talked about, there are many, many aspects to complying with sales tax regulations that companies don't consider initially. Most people focus on that tax rate, getting the right tax rate. But there are many other things associated with sales tax, and one is nexus, which we talked about. The other is product taxability. There are many different types of products and services, and they change often on the rules, what's included in them and how they're defined. And that's a really hard thing for companies to keep up with, especially if they have new and emerging technologies. Jurisdiction assignment is another one. Where you need to file is really important to define, and sometimes that is wrong if you're using zip codes. Exemption certificates are another thing that a lot of companies don't think about. They typically have a paper that they file away and don't think about, is it properly filled out? That can make it invalid, and that's a huge, huge audit risk. In fact, it's the #1 audit risk when it comes to the auditors knocking on your door. And then there's actually the filing of returns. They're all different in all the 11,000 plus 12,000 plus jurisdictions across the United States. There's not a standardized form. And then being ready for an audit. So when an auditor does come knocking on the door at some point, you have all your ducks in a row and all the paperwork and information ready at your fingertips to make that audit go smoothly. So the good news is Avalara does have a sales tax suite that can address and automate all of these challenges that we've discussed. You can very easily add jurisdictions with one click, so you can add states and the locals to know where to file. We have a whole team behind the scenes that helps keep up with product taxability and all the rules and ongoing updates. We do that for you. We have a lat-long jurisdiction assignment, so when you type in your address of your customers, we do not use zip codes. That's not how you get proper sales tax rates, and we do all the jurisdiction assignments for you. We automate certificate management. We handle the prep filing and remittance directly to the jurisdictions. And then you have great documents for audit time, and very easily accessible to you. So let's talk about really quickly, this is towards the end here. In essence, Avalara has 3 pieces to their end-to-end compliance solution, which is all integrated. And the first one is Avatax, which is our calculation engine, and it's integrated to over 700 different ERP, POS, CRM systems, anything that you can think of where tax is needed to be calculated. We've built that calculation. Your systems are integrated, and the point in which you need to, taxes are needed when you need to calculate sales tax, like the invoice or online checkout, a request is made to our Avatax engine in the cloud, and then it returns the proper tax rate to your system. And in order, again, to make all of this work, Avalara is monitoring in the background and updating all those rate rules and boundaries. Avatax is integrated with number 2, which is Cert Capture, which manages our exemption certificates. And it's really important, I think this is one of Avalara's real defining characteristics, Cert Capture. When a certificate's about to expire, a request is sent to your customer can click a link in an avalara. It directs them to the Cert Capture site where they can provide all the certificate information online, and it's validated. And then when Avatax is calculating that tax, it checks Cert Capture to see if that transaction should be exempt, and if so, would return back 0 tax to. And again, in order to stay in sync with your customer master data, Cert Capture is designed to pull information from your ERP system or accounting system. And then the last piece, which is returns. Very, very important. And a lot of people, and these can all be purchased independently too, but they all work seamlessly together. Returns manages the preparation and filing and remittance. And when it's time to file, you'll review a liability report, a real simple report based on the tax data that has already been calculated from Avatax, and you will approve the filing, and then the returns and will be filed and remitted to the appropriate jurisdictions directly by Avalara. We pull one payment from your company and we remit all of it to the various jurisdictions. And to give you a sense of scale of Avalara as a company, Avatax in, I think, 2017, because we don't have 2018 at our fingertips yet, we calculated over 6.7 billion transactions for our customers. And in terms of exemption certificates, we managed 18 million exemption certificates, and with taxes remitted almost 30 billion, 29 billion in taxes in 2017. So it gives you a sense of scale for our company. And then lastly, give you a sense of who our customers are. We have over 20,000 customers now that get tax compliance right, because we really think that there are 3 pillars. We're accurate, we calculate, manage the certificates, and file the returns. We're really efficient. We're built in the cloud. We provide those real-time updates and tax rules and rates. So there's no more tables, anything you have to enter in your ERP system. And we're integrated. We've got all the integrations to your ERP systems and POS systems. So we can scale either up and sometimes down. As companies retract as well, we can change with you and always have a consistent tax engine. So that's all I have for you today on Economic Nexus. You may have questions, so I'm gonna let Sasha see what's in the poll, if any. Sasha, are you there?
Yes, thank you so much, Bethany. Sorry, I was muted. So
That's
let's
okay.
take a look and see what we have.
And,
Really
and I
quick.
wanted to mention,
Oh, go
go
ahead.
ahead.
Go ahead.
I wanted to mention we're really very tightly aligned with SWK. I love the SWK family. So you have my contact information on the screen, but really the best start is to talk to your SWK account manager. They know how to get a hold of me. They know a lot about Avalara, and many of them have already had experience with working with clients on Avalara. So they're your first step in the process to talk about Avalara.
Definitely. Thank you, Bethany. So yeah, I was going to mention that as well. If you guys have any questions, and if you don't know who your customer account manager is, you can just email camteam@swktech.com, and we will get back to you definitely. And so now let's take a look and see what questions came in. Right, so it looks like we have a couple questions, and then we'll see what else comes in. But the first question is, do I need to change any of my current processes to use Avalara?
So I'm assuming what you're asking is there anything you need to do to your ERP system? And the answer is no. The beauty of working with a company like Avalara is we do, as I mentioned in the presentation, we update all the rates, rules, and boundaries for you, and we're built in the cloud for your ERP system to call upon us when you need to calculate tax, or all the rules are done for you, so you don't have to keep track of them. I hope I answered that. That was the answer to your question.
Okay, great. Let's see. So the second question that I see in the chat is, when taxability rules or tax boundaries change, do I need to do anything to update my tax schedules when using Avalara's service?
No more tax schedules. So that's the beauty. We have a whole team of people that are managing all the different taxability rules, state by state, product by product. So you really don't have that concern anymore. All of that is taken care of for you by Avalara service.
Okay, great. So it looks like that's all the questions that we have for today. We can wait a couple more seconds, see if anything else pops in. But it looks like that is it. So thank you again for attending, everyone. This will conclude our webinar today. And again, go ahead and look out for that recording either later this afternoon or tomorrow. Have a great day, everyone. Thank you so much, Bethany.
Thank you, Sasha. Take care.
Bye.